Owning your home is part of the American dream. In this video, I will go over 5 things you must consider before getting a home mortgage. Make sure to watch this video till the end so you don't miss these 5 things. You will find this valuable. If you are new to my channel, my name is Unwana Udoh. Every week, I share content on how to improve your personal finance and grow your wealth. A home is the single most expensive thing most people will ever purchase. Paying off a home loan can take as long as 30 years and will involve paying an amount of interest 3 times the cost of the house. In short, buying a house is not something to be done without a lot of planning. With the average American living in their homes for 7 years or less, most mortgages are probably offered to people who have purchased a home previously. There are people buying for the first time, and for them, knowing how the process works are important. Before embarking on getting a home mortgage, here are the 5 things you must consider. Number 1. Do you have adequate savings? Do you know that over 70% of Americans do not have $1,000 saved for an emergency? Only 1 in 2 homeowners have more than $1,000 saved up in an emergency fund. If you are thinking about getting a mortgage, make sure you have at least 3 to 6 months worth of living expenses saved in an emergency fund. Number 2. Do you have at least a 20% down payment towards the purchase? Most financial experts recommend that you put at least a 20% down payment when buying a house. This puts you in an equity position. In order to encourage more home ownership, the government has various programs that are geared towards assisting first-time home buyers. Unfortunately, not putting down a 20% down payment requires you to pay private mortgage insurance or PMI. This is insurance that protects the lender's interest and you have to pay for it. If you want to avoid this, then you should strive to put down a 20% down payment. Number 3. What is your debt-to-income ratio? The debt-to-income ratio is one of the criteria lenders use to determine if you are qualified to get a mortgage. DTI takes into account your outstanding debt in relation to your income and based on this ratio, determines how much of a loan you can qualify for. Make sure to check the description below for a link to more resources on how to calculate your DTI. Number 4. What is your credit score? Is it high enough to qualify for a mortgage? Your credit score is another important criteria used in the lending industry and represents your creditworthiness. The higher your credit score, the more favorable your loan terms. If you need to learn more about credit, make sure to get a copy of my ebook on credit. Check the description below for details. Also, get a copy of your credit report by checking the description below. Knowing your credit score and what is in your credit report is essential before applying for a home mortgage. You do not want any surprises on your credit report. Number 5. Do you have other investable assets? Before applying for a home mortgage, are you fully funded in a retirement account? Do you have other investments such as brokerage accounts, money market accounts, mutual funds, stocks, bonds, etc.? These are questions you should ask yourself before moving forward with a home mortgage. Here are some useful tips for first-time homebuyers. Know how much you can afford to pay. This includes not only the total price of the house but the monthly payments, as well. Do not be fooled by the monthly payments the lender tells you that you can afford. That number is usually high enough to be well beyond most buyers' comfort zones. If the lender suggests that you can pay as much as $2,500 per month but you only feel comfortable paying $1,500 per month, then that is your limit. You never want to be in a position where you are house rich and cash poor. Check your credit ahead of time. You do not want to be denied a home loan because of errors on your credit report. You can get copies of your 3 credit reports by clicking the link in the description below. Get a copy and make sure the information is accurate. Shop around for a good lender. The interest rates and terms will vary from lender to lender, so you should shop for the best terms. You should also try to find a lender with whom you feel comfortable. You will be paying on your mortgage for decades, so find a lender and terms with which you can live with. Beware of closing costs. This is the money that a buyer is expected to bring to closing. Don't be caught off guard when it comes time to close and the lender asks you to bring a certified bank check to closing that you do not have. Find out ahead of time how much it will cost you to close on the loan and have those funds ready. Most lenders today are pretty good at getting these figures to you ahead of time. It is the law that you get a good faith estimate of your closing costs ahead of time. For most of you watching this video, these items may seem like common sense. However, anyone buying a home for the first time must be prepared for the process. If you found value so far, hit the like button and subscribe for more great content. I really appreciate your support. Thank you. The next video on the screen contains information you will love. Click to watch that video now and I will see you there.